Hello guys, how we all doing? All right, let's get this show on the road. I'm here to give you guys pure value just before the man himself, Oscar, is going to be dropping you guys some nuggets. I'm talking pure nuggets on trading. But before we even start it off, is anyone fired up? Is anyone excited? Is anyone ready to go? Are any of you feeling my energy, catching my vibe? Please put some fire in the chat. Put some ones in the chat. Put some fire in the chat if you're excited to go. If you're ready to go, I see you, Lee. Let's go. That's it, Oscar. Let's go. All right. Now, I'm going to keep it very blunt. Everything I'm going to say is going to be something I do myself. Is going to be applicable. I'm not going to be here to tell you guys any lies, anything. Everything I say, I do myself. So without further ado, let's get started. Now, I want to start off by talking about this week. What happened to me this week? Because when it came to trading, this week was not great. Like, I think it was, let me just think of the figures. Oscar, correct me if I'm wrong, but some people were mentoring made 20% from what our mentorship kind of gave them. They made 20% account growth. However, like me personally, I'm in negative 8% this week. Like, I don't understand how people, that I'm mentoring made 20%, then I made minus 8%. Like, I thought that didn't make sense. And it really got me down. Like, until today, until this morning, I was really, having a bad week, not getting involved, not talking in the group chats. And it's really, it really got me down and it got me upset. I wasn't doing my self-development. But then I took a step back. I tried thinking in a third perspective and I was like, okay, so if it's working for other people, then there's something I'm missing. And then I realized the things I was telling people I wasn't doing myself. And that's why what I'm telling you guys is, stuff I've applied myself and things I'm doing myself. So I took a step back. And all the things I was saying, like nothing changes if nothing changes, I think that's one of the main ones. Des Ami always emphasizes that one. I'm trying to think of some other ones. 1 second. Nothing changes if nothing changes, for example. I kept saying that out to everyone, and I was doing the same things over and over again. The main thing was I didn't have a schedule. That was number one. I didn't schedule my success. Success loves to be scheduled. You have to schedule success. I wasn't scheduling my success. So I was waking up when I was waking up. No consistency. Consistency is what leads you to success. Like, that's one of the key principles. Consistency leads you to success. And it really got to the point where I'm like, nothing changes if nothing changes. So normally before I do a Zoom, I kind of try to fire myself up with some motivational videos. I message some people kind of, but I was like, you know what? It is what it is. I'm going to put my phone aside, put my laptop aside. I'm just going to go outside, go for a run. I'm just going to go for a run. Ended up playing some football with some of my friends as well. I just went for a run. And I'm telling you guys now, I have never had this energy on a Zoom. Like what you're getting right now, it's like me. I wouldn't say I'm at 100% because I'm a strong believer you can never be at 100%. You're always, 1 or 2% away. You're never going to be at 100%. Every 1 or 2% you gain, you get 1 or 2% closer. Like, it's impossible to get to 100%. That's why life is not capped. You can literally, you can honestly do whatever you want. So I would say I'm on like 98% at the moment, but the energy I have right now is all because I made a change. Like Lee, I see Lee Williams on a call, real beast, like someone I look up to in so many ways. Yesterday, I see you, Lee. Yesterday, I saw he was scheduling. I caught a little bit of his Zoom. He had a small Zoom for like a inner team, and I caught part of the Zoom. And the Zoom was saying, he was saying how he scheduled it. He showed us his planner, and he showed us how he scheduled his success. So I literally just went on calendar. And you know what? I wasn't going to do this, but I'm actually going to share my screen so you guys can see it properly. We'll jump on this in a second. Let me know if you guys can see my screen, by the way. If you can see my screen. Lee, give me a thumbs up if you can see my screen. All right. Let me just check. Yeah. All right. So as you guys can see, literally, this was the week before. Pretty much nothing that important. But now, today, boom, had every minute of the day planned. In all honesty, I didn't even wake up on time today, but it's all about the process. Saturday, I know exactly what I'm doing Saturday. Sunday, I know what I'm doing Sunday, and back on a grind. Monday, I actually need to edit this because they've changed the session times, but it opens at 1 now. But I started scheduling my success, and this is only going to get busier and busier. So literally, as soon as I scheduled my success, things started to change. But that's not what I was going to talk about. That's actually taking me a bit off track. So before I pass you guys over to Oscar, put you in very good hands, one thing I'm going to talk about is journaling. Now, this right here is like my second Bible. Actually, in fact, this is obviously the Bible. This is my second Bible. This right here is the importance of it. You cannot misunderstand it. Now, I'm going to show you guys some examples of things that happened to me during the week that really got on my nerves, like trades that went my way, went, over 100 pips in profit, a couple of them. But I deleted the order too early because I wasn't patient, or it just missed entry because I was sleeping, and little things like that. And I made so many little mistakes, but because I made these mistakes and because I'm in minus 8%, I know next week I'm going to hit plus 20% minimum because I journaled it down. And the most important thing when it comes to journaling is you have to say what you're going to do to improve it. Now, Oscar is the journaling pro. Now, I'm not lying here. Oscar kind of set me on a way. But if you guys can see, for example, from Tuesday, quite a lot going on there. Let me just put it in front of my camera. Quite a lot going on there. But I have all the pairs, all the mistakes I made, all the trades, all the mistakes I made. And every single time I've got, a way to fix it in the future. So, for example, don't move stop loss to break even too soon. Let it ride. Because what happened is it tapped our entry, started going in profit. I straight away, like 10, 15 pips, moved stop loss to break even, tapped my entry again, and then went 150 pips in profit, something like that. It was crazy. Once again, for gold, if entry is missed, lower future entries, increase future stop loss. So it's just the sort of thing where you just have to learn from it. Journaling is so powerful. Now I'll actually go into my trading view very quickly. 1 second. Let me find my ideas. All right, this one here, USD CAD. Now, this is one of the examples where, patience really cost me because I didn't have it. So this isn't live. I don't know what happened after here. But as you guys can see, I set this up around here. I'm pretty sure it was around here. We went off this. This is, the FU institutional candle. It's an FU, which is a type of institutional. I'm sure Oscar will get into it. But here, as you can see, I left a note. Should have kept order pending. Entry was perfect and would be currently in profit. Don't be trigger happy. By trigger happy is not only entering, it's deleting orders too soon. So I saw the market come to this area here and it missed the entry. It was like 11 pips or something. It missed entry and it really, really annoyed me. And then I saw it go all this way into profit. Then I was like, nah, you know what? I'm deleting the entry. But look what happened. It came back, touched the entry. This is on a 1 hour, by the way. The 60 represents 60 minutes here. It came, as you guys can see, touched entry perfectly, went into my entry here. In a way, it's annoying. But it touched my entry perfectly. And then in the next hour, it went to the same amount of profit that I was crying about before. So literally, this shows, don't be trigger happy. Make sure you guys learn from your mistakes and journal it because, if you can learn from others' mistakes, yes, because there's a saying that goes, a smart person, learns from his own mistakes, but a genius learns from others' mistakes. But, I'm all right with being smart. I'll take being a smart person, so I'll learn from my own mistakes. So I know I'm never going to make this mistake again. I'm never going to delete an order too early. Let's see if I have anything else here. Faith in us, setup, journaling, miss entry by 12. All right, let's have a look at this one. I saved a few here. It's a bit unorganized. All right, so for example here, I wasn't watching the charts. I should have. Like my note from this in my journal is set alerts, make sure to watch the charts, watch it happen in live. I wasn't doing anything in that day. After I set up my pending orders, I slapped on Football Manager on my laptop and I shouldn't have. I should have been reading a book while having this in the background. Literally, it is so important you guys journal. Like, if I didn't journal this week, I would make the same mistakes over and over and over again. And what does Des always say? In fact, it's not even Des is saying, but he does repeat it a lot. He always says he was living the definition of insanity, which is doing the same thing over and over again, but expecting a different outcome. So if you don't start journaling when it comes to trading, you are living insanity. You are literally living insanity, because you're going to make the same mistakes over and over again. And it's going to be a recurring pattern. But now I welcome all future mistakes, because they mean, any mistakes that come mean I'm a step closer to being an 8-figure, 9-figure trader. Because let's be real, that's my personal aim. Now, I kind of went off on a bit of a rant there, but I hope you guys did get some value from what I have been saying. Honestly, journaling is just so important. I don't think I had... Oh, this is another one. This here, perfectly, 250 pips in profit, Euro CAD. I had my markup here. I saw it, go around here, go back up to here, and I deleted the pending order. What happened? I would say that's about 9 till... That's what? Just over 12 hours? That's 15 hours. 15 hours later, it entered me perfectly. And as soon as it hit entry, it went all the way back down to take profit straight away. Like, it's just so important that you guys, I made the same mistake twice. I made it, and that's because I didn't journal. I made it on USD CAD. I think USD CAD was a bit after. This one came first, but I didn't journal this one, but I wrote down USD CAD. So all you have to do to journal is literally write down the trade, write down if it went your way or not. If it didn't go your way, say why. If it did go your way, say why. And then at the end of the week, review it. Now, I'm going to leave you guys on this note. I'm going to pass you over to Oscar. Just give me 1 second. Now, I think Oscar's going to go over some smart money training with you guys, which should be very powerful. I can't seem to find him. Let me stop sharing. Can't seem to find him. Oscar. Oh, there we go. There we go. More. Make host.
Nuggets. Fucking hell. Yeah, guys, like Philip said, man, I hope you lot will take your notes, because the thing is, if you don't journal, and especially for the people that want to be long-term traders, especially if you want to be independent traders, because the way you have to look at it is, if AFA and IML, if there's no more AFA and there's no more IML, you're still going to be able to trade. And I think I was one of those people that the answer would be no. And I think there's a lot of people who are even on this call right now who, would you be able to be an independent trader if AFA and IML weren't there to support you? So that's why you always have to think long-term. And in terms of the, to link it back to the journaling side, if we're not journaling, let me share my screen. If we're not, if we're not journaling, you're going to make the same mistakes and you're not going to learn from your mistakes. And that's what, that's what trading is. You have to learn from your mistakes. Losses, just like the wins, you need to know why you're winning. You need to know why you're losing. Otherwise, yeah, like I said, you're going to just keep making the same mistakes. But yeah, guys, can you drop a 1 in the chat if you can see my screen? Just want to make sure everyone's on the same page. Sweet. All right, cool. So I'm just going to go over 2 examples from trades that happened this week. One of them is an example that has already happened. I think one of them was discussed by Philip already, and the other one is one that hasn't happened yet. So I just want to show you 2, a previous example and a live example, even though the market's about to close. But this is EuroCAD. So yeah, in terms of the smart money, I just want to take you step by step through how I start marking up my my charts to enter. The first thing I'll do is I'll make sure that I am picking, because a lot of people have issues picking trades. So I always pick a pair if it is currently in its market time. So obviously, you got the London session, New York session. So if I'm looking for Euro CAD, I'd either be looking at the London session, because obviously that's Europe, or you could even be looking at the New York session, because that's the CAD pairs. And then I'll always start off doing a top-down analysis. So I always start off looking at the monthly and trying to see what that's telling me. So already when I go to the monthly, I can see there's already equal highs being formed here. So clearly, this area has been rejected. As well, if we're looking at fundamentals and news, we know that euro is very weak at the moment, and we also know that CAD is doing quite well because oil's had a jump recently, and Canada produces a lot of oil. So right now, the monthly is telling me that we're looking for sales, and so is news. Same thing again on the weekly. I'm seeing a lot of gaps here, and these gaps are slippage that have to get filled. So at some point, it's not a matter of if, it's a matter of when. The market's going to have to come back down to these areas. So again, monthly, weekly, telling me to look for sales. I'll switch down to the daily, same thing again. These gaps here. So I knew that I was looking for sales for this. Go down to the 4 hour. It was looking like a slight consolidation in the 4 hour. But now that I've done that, I know that I need to be looking for sell positions. Now I just need to find a good entry. So I switch it down to the 2 hour. And obviously for smart money, what we always look for entries is institutional candles or FU candles. And at the time, because this is a past trade, I had only seen this part of the market. So like I showed in last week when we did our session, I can see that there's equal highs here. Okay, equal high is never going to be perfect, but it's just a general area. So I know that there's liquidity here, which means that people have got their stop losses here. So if the banks come to this area, they're going to release a whole pool of liquidity. They're going to make money. And we can see that where the arrow is right here, we've got an institutional candle. It's also a FU candle, because this candle took out liquidity. And it's also the last up candle before the down move. So as soon as I see this is a perfect entry. So you'll mark out the opening of this candle, mark the closure of this candle, and mark out the 50%. So now I've got my entry and I've got my stop loss already just from looking at that. So then what you do is on TradingView, you would mark up your entry, mark up your stop loss, and you would mark up your targets. At the time, we'd only seen this part of the market, and targets would either be slippage, imbalance, or equal lows. Here already I can see equal lows, and the equal lows are at 5,400, 1.5400. That's a key psychological level, and markets are attracted to key psychological levels. And if we look at what the market did, it perfectly came into this area, a little bit lower here, perfectly came into this area, tapped it, which shows the manipulation of the banks, and it shows the directional bias they were trying to take the market in. It tapped the area perfectly, and then it moved down, and it's still moving down to this day. This was one of the trades that me and Philip both marked up together, but we didn't end up entering. But obviously that's gone in the journal. But this trade is now 500 pips, 490 pips to be precise. So just to show the potential that smart money has, if you're on a one lot size, it's pretty much 10 times 490. I'll let you do the maths, but yeah. So that's a previous example of smart money. But I think the most important thing that people forget to do is to do a top-down analysis, because people go on a 1 hour and enter off that, but there's so many other time frames you're missing parts of the story. So if you took anything from that, is that you have to do a top-down analysis, and you need to get a directional bias, because your directional bias is going to tell you whether you're looking for buys or sells. because you're not really going to want to go against the, against the trend set by banks, unless you've got 20 billion pounds to throw in an account. Okay, so this is USD CAD. This one hasn't happened yet, and I believe personally that there's a high chance it will happen, Monday, Tuesday next week. So again, top-down analysis on a monthly. Again, this is CAD. I know that CAD's doing well, and we see equal highs here. So there's clear rejection on the higher time frames. The higher time frames are used for the directional bias. The lower time frames are used for the actual entry. Here, there's perfect equal highs. It's not a coincidence. So clearly the market's rejecting that area. If I switch down to the weekly, again, same thing pretty much. And again, there's gaps. There's gaps here that need to get filled. So at some point, the market has to come there, and those gaps are not too far away. So I do believe that they will get hit this month, these gaps, personally. As well, this looks like the beginning of a downtrend on the daily. This looks like a retracement. Usually the retracements are equally weighted, so I believe this retracement is just above the slippage or the gap here. So again, I don't think that's a coincidence, but there's a high chance that the next move down could come towards the slippage and fill that. So again, right now I'm building a directional bias, and I'm looking for sells for this one. So I'll go down to the 4 hour, same thing. And here there's also actually equal lows, and it's a key psychological level, 1.32. Again, the market loves key psychological levels. 1.32. So I've got targets established already in terms of where I want to go, and I know I'm looking for sales now. I just need to start to look for an actual entry point. 5 bags, yeah, exactly 5 bags. So yeah, like I said, now I'm just really looking for entry points in the market. By the way, guys, if you want me to go over anything or if you have any questions, just put it in the chat. So yeah, now I know I'm looking for sales. I've got my targets being, points of TP. Look at this gap. Look how big it is. That is nearly 120 pip gap. A big gap, and there's liquidity, there's a whole load of money here. If the banks come into this area, they're going to make a lot of money. So that's why they're, the market's naturally attracted to these areas. Please, can you talk more a little bit about the slippage and gaps? Yeah, so the slippage, because the market closes on a Friday at 10 p.m. and it opens on a Sunday at 10 p.m. During Friday to Saturday, for the general public, us retail traders, we, it's closed, can't trade, so we don't see it. That's what this is. That's what this area here is. That slippage is usually what happens on the weekend. There's a big slippage. There's a difference from the open to from the close to the open of the next candle. However, the big banks, big players, they are still trading during those times. There's still movement, so they get to see what's happening. We don't. But because there's a big gap, the market is naturally going to have to come back to collect the liquidity there. Liquidity just means money, and because there's a whole load of liquidity sitting there, the banks, it's a matter of time. Like I said before, it's not a if, it's a when. So that's a target that can be used, because if the banks bring it to here, they're going to automatically release money. So yeah, now I'm looking for an entry. I like to do my entries on the 2 hour, 1 hour, and 30 minute personally for smart money. So yeah, I'm looking for an entry point for a sell. We had an institutional candle here, but this one already got filled. We had another institutional get formed right here. Reason being that not only is it an institutional, it's actually a FU candle. An FU candle because it took out previous liquidity. There's liquidity here. There was also liquidity here. So there was money sitting here. There was stop losses here. The banks took them out. Banks took them out here. Same thing here. There was liquidity here. Banks took it out. So this candle is a very valid institutional candle. Now, currently market price is below the entry. but right here, there's equal highs, which means there's also liquidity and stop losses here. So what I personally believe what I personally believe is going to happen is I'm going to use this institutional candle here as an entry point. Yeah, Otis, all the gaps are usually weekend closures. So yeah, there's liquidity sitting above here, and I want to use this institutional candle as an entry. So again, same thing. I'll mark the opening. I'll mark out the closure just above the closure here, because there's a key psychological level just above 42600. So now I've got my stop loss, I've got my entry. And previously I marked out potential targets, but these targets are far away, quite far away. So what I'll do is I'll look for several targets. That's why we have TP 1, 2, 3. In terms of my entry, I know that my entry is going to be here. I could put my stop loss here, but because there's a wick, I'm going to put it slightly above. That makes it a 35 pip stop loss. And my target 1 is going to be here at these equal lows, because markets are attracted to equal lows, equal highs, slippage, and imbalance. So there's equal lows here, and also if you look closely, there's actually more slippage here. There's more slippage here that needs to get filled. So that's another target area. TP 1 and 2 are always good to have, but another thing people need is to take profits for partial profits, because a lot of the time the trades will go your direction, but they won't go to TP. But you still need to find a way to basically take partial profits at certain points. So we've got one target here, one target there. With target 1, it's already a 1 to 3.8 risk to reward. If we go into target 2, I usually go just above. That turns into a 1 to 6. So if if you want to enter this on your demo, I would put this here as TP1, and this one here as that one below as TP2. That's and another reason why smart money is one of the best ways to trade, in my opinion, is because of the risk to reward. Right now I've got a 1 to 6. That means you can lose 6 trades, win one of them, and I'll be in profit, because this is a 1 to 6.2. So I could have 6 trades that hit stop loss, then after that win 1 trade, and that's it, I'm back in profit. And so yeah, to me, that's because trading is a numbers game. The risk to reward has to be a minimum 1 to 3. That's the rule. You don't want it to be any lower than to this. What is it? Nearly 1 to 4. But it gives you leeway, because the losses happen. So smart money kind of takes care of the losses. And another thing as well is, once you double your stop loss, so right now my stop loss is 35 pips. So when I get to 70 pips roughly, which is here, you want to break even. You want to move your trade to break even at the latest here. You could even do it at 50 if you want to be safe, but here's when you want to move the trade to break even. Because for all the trade could reverse. The trade could reverse against you. So yeah, I personally believe the market will consolidate a little bit, and over the weekend come and clear the liquidity here, come into this area, tap the institutional candle, and then move down to at least these equal lows minimum. And because there's a lot of slippage below, and also the dollar is in a huge bubble, I believe it's about to burst. I believe it could even come lower as well. So that is my thinking in terms of USD CAD. If you want me to send you the markup, message me, I can send it to you privately, DM me. But yeah, guys, that is it. And I hope you lot got value. If you have any questions, drop them now. Let me make Philip host. Let me make you host 1 sec.
All right, guys, if you got value, please, please, please drop a 1. You know, Oscar, I ask him to jump on every now and again. He's always jumping on, always jumping on, doing me a big favor. So if you got some value, can you drop a 1 in the chat box? And any questions you have, put them in the chat now. I can unmute Oscar. If you have any questions, we have some time left for Q&A. So anything to do with mindset, to do with institutional trading, smart money, any questions you have, now's the perfect time. There's not even too many people here, so I'm sure we'll get to anything. So I'll leave a few seconds for the questions. If not, we'll end it there. Psychological level, what does it mean? All right, I'll unmute you, Oscar. You can take that one. Unmute.
Yeah, yeah, so in terms of the psychological levels, if I just share my screen one more time. Let me get rid of all of this mess. So you see, I'll give you an example. When a human turns 19 and they're going into turn 20, that's a big thing. It's bigger than someone going from 14 to 15 or 12 to 13. Just like when we, in the year, we're 2020, going from 2016, 2017, there's nothing big. Going from 2019 to 2020, that's big. Just like going from 1999 to 2000 is big, you know what I mean? So it's a psychological thing because the markets are psychological. So when there's key areas, can you see, look, if you look where my arrow is, here at 1,400, at 1.4100, right here. Look how the markets rejected that area. It's not a coincidence that the markets continuously wicked at the same area, which is, you know, 1.4100. It's a key psychological in the market where price is just, you know, not able to penetrate.
I think you have
so that can you preempt an institutional candle? Yeah, so I'm guessing by preempt you mean explain. An institutional candle is the last up candle before a down move. So I'm going to circle or box. So this blue candle here is an institutional candle because it is the last up candle before a down move. Okay, it's the last up candle before a down move. The reason it's called institutional, it stands for institutions. The institutions are the big players, the banks. The banks control the markets. The banks, to make their money in the market, they have to buy to sell and they have to sell to buy. In this instance, the banks bought up before they sell down. So that's why this is called an institutional candle. Another institutional candle is here. Now this one is an institutional candle, but it's also referred to as a FU candle because it took out previous liquidity here. So you see how there's liquidity sitting just above these wicks. There's liquidity here. There was also liquidity here. Okay, that means there's money sitting here. So if the banks come back to this zone, they're gonna make money. All here, there's money. This candle, you know, in these two candles, they took out that liquidity. So that is why it's called an institutional candle. So it's the last up candle before the down move, and it takes out liquidity. So that's the manipulation of the banks or the institutions. So yeah, that's what's going on there, and those are what we look for entries. And the last quick, Oscar, do you use call levels or just pending orders? I use both call levels and pending orders. 95% of the time, my entries are from pending orders because I'll always analyze the market, and rarely will I have the opportunity right in front of me. So I always set pending orders, but I also set call levels because a lot of the times my pending orders don't get activated. Like Philip showed an example of, you know, one of our trades that we didn't enter because it didn't activate. Always set pending orders and call levels, therefore you don't miss anything. And another advice I would say is, you know, call levels for entries to make sure you don't miss it. Also do call levels for partial profits. Do call levels for when to move to break even. Because, you know, you could still enter the trade and forget to move to break even, take partials. The trade could go 70 pips in profit. You haven't looked at it, then it hits your stop loss. Whereas someone else could have set a call level, taken 50 pips, and then moved to break even. So yeah, that is that. Let me make thingy host. Let me make
No,
Philip
I'm still
host.
host, Oscar. I just unmuted you.
All right, sweet.
All right.
So yeah.
Sorry, I cut him out. I cut him out abruptly. But do you twin trades or take partial profits? Both are very, very important. Oscar, if just send me a message if you still want to talk, because I cut you off a bit there. But let me know. Twin trading is quite important because when you have, I sometimes triple trade even. By triple trade, I don't think they invented a word for it, but triple trade is just simply where if you have TP 1, 2, and 3, you would split your lot size into 3, obviously, and you would set each TP to where it is. And partial profits are very, very important. Like if, the reason a lot of people made money this week, even though a lot of things didn't go away, is because partial profits were taken. Like our shared account, mine and Oscar's, is actually in profit at the moment just because of partials. We hit a few TPs, but it was mainly partial profits. If we didn't take partials, some people take partials 15, 20 pips in. If you're using a very small lot size, I would say take partials, let it run a little bit, and then take partials. But the bigger your lot size, the more freedom you kind of have. Also, I just see another question there. Danny, let me know if that explains it a bit better. Otis, can you set call levels to give you an audio alert rather than a silent message? Yes, I believe you can. I actually have it set so that a call level has an alarm. So even when I'm sleeping, if one of my call levels activates, it wakes me up in the middle of the night. If you private message me, I'll be able to set up for you. Yeah, in the settings you can change it. But yeah, I think that explains. I think that wraps it up. Any more questions, or is that it? I hope everyone got value, by the way. Today was, I just had different types of energy because I changed. I'm no longer living in sanity because I made a difference in my approach. And I think it's important to take a step back. But thank you guys for jumping on. Any questions you have, feel free to message either me or Oscar. And if you want to look back over it, I believe there will be a recording later on. Yeah, I did record it, just checking. I appreciate all you guys. Enjoy the rest of your weekend and make sure if you're interested in smart money to jump on Dez's Zoom with 2 of the smart money educators from Go Live at 10 p.m. That will not be one to miss. Hope you have I think it's actually, is it tonight or Sunday? I think it's either tonight or Sunday. I think it's Sunday, 10 p.m. Make sure you jump on that, guys, because that will be amazing. You'll have a chance to speak to them directly. Hope you all enjoy your evening. Any questions you have, drop them in the chat. That's all from me. Thank you for jumping on.